Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year. It finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000.
Despite a rocky start, Bitcoin is still on track to soar past $500,000 in what could be a monumental year. That's the outlook from macro expert and Real Vision CEO Raoul Pal. While tightened liquidity from the Fed and Treasury has temporarily weighed on the market, Pal predicts this phase will be short-lived, paving the way for a strong rebound reminiscent of the patterns seen in 2013 and 2017. Pal anticipates Bitcoin ending the year in the range of $200,000 to $500,000, fueled by shifting market dynamics and increasing adoption. His analysis highlights the cyclical nature of Bitcoin's performance and its resilience despite temporary setback. Stick around until the end of the video as Raoul Pal dives into his bold 2025 projections for Bitcoin and the broader economy.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The big volatile drawdowns are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward-looking. So it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is it shouldn't last that long in price or time. And then we've got liquidity all the way through this cycle. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US, it was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year. I don't think it goes down 25% because there's ETFs and the market is more mature. Let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know, so I always kind of give a probabilistic tree of, these are the kinds of zones.
In 2013, Bitcoin saw a sharp correction early in the year, only to rebound and hit record highs by year's end, a pattern that repeated in 2017. Raoul Pal predicts that 2025 could follow a similar trajectory, with early corrections paving the way for significant gains. Pal projects Bitcoin reaching $200,000 in a worst-case scenario, $350,000 as a base case, and potentially over $500,000 in an optimistic surge fueled by increasing liquidity and adoption. Now, let's turn back to Raoul Pal for his insights on the global economy and what the future might hold.
My general construct is this year will be a good year. We will go to much higher valuations. And then, after we've rolled the debt, we tend to tighten liquidity because the inflation pressures have come back somewhat. That tends to draw down the markets. We kind of reset again before we start this cycle all over again. My working hypothesis is this is going to be, valuations will get expensive this cycle. The correction may not be large, maybe just be a year of sideways, down 15% something. But the next cycle, because that's when AI, robotics, self-driving cars, missions to the Mars, all of this starts hitting, we will go to a full bubble cycle. And then we can think about what the world looks like after that. So I kind of think we're in a golden bull market, at least until the end of the decade. So my job as a macro investor and analyst is to look ahead in the future and try and figure out where the world is going. I have been using a framework since 2000 of debt, deflation, and demographics. And that framework has been in play ever since. The whole world that we understand it is driven by scarcity. And generally, as we've transitioned from manufacturing economies to service economies, scarcity of knowledge is the thing. That's why lawyers get paid so much money, and accountants and financial advisors and doctors and surgeons and all of this stuff, radiologists, is because there's a short number of people, large demand for the services. AI has just made that knowledge a zero. People don't get it yet, but it's all a zero. Being a content creator, creating a media company, a zero. Making films, the cost of making a film will go from $100 million to $5 million or $2 million. So that's the cost element. On the manufacturing side, we're bringing the robots in. So what is the expensive thing of a manufacturing? It's the people. Well, you're just going to get rid of them. Okay, so we're kind of laying off a lot of jobs. Everyone understands that about AI over time, but it's offset by an aging population. So there's less people in the labor force anyway. So that is not the bit that concerns me. The bit that concerns me is, what does it mean for your business or my business when we're replaced by AI? What does it mean for financial markets when we have artificial superintelligence, ASI? Well, as investors, we're replaced because somebody can do it better than us. Somebody can do everything better than all of us. So you start thinking, well, I'm not sure how financial markets even work. Do they just... Well, I don't know, because it's not going to be run by human emotion. It's going to be run by machine emotion or machine logic. Then we start thinking, well, the other thing about AI is right now we've been living this software is eating the world revolution that Mark Andreessen talked about many years ago, and the rise of SaaS software. Well, now it's pretty close already. Let's say you've built a beautiful new platform for whatever, financial advice. I can say, hey, I want to copy Jimmy's platform, but I want it for the Indian market, doing for their regulation, and it'll build it in less than a minute. So what moats do we have around our business? And what moats do we have around the fact that you and I got paid for knowledge? And that scales everywhere. So humans will find new ways of making a living. And I think the online communities is one way, because humans are social creatures by nature. So they want to be around other humans, they want to be talking to each other. But the world is going to fundamentally change in ways that we can't understand. We've never not been the top of the intellectual tree. But if you look at AI, it went last year from an IQ of 90 to a IQ of 157. So we pretty much doubled. If we double in IQ, we get to 300 next year, which is more than any human ever recorded. And then the year after that, 600. Then the year after that, 12. I mean, this is La La Land, right? So I kind of thought about this and thought, with the exponential change that's coming in all of this technology, even longevity increases for humanity as genetic sciences use this and nanotechnology, is that we don't understand what the world is. And so when I come into a process of massive change, it's going to create societal disruption. It's going to create enormous opportunity, but in ways we don't yet know. The answer for me is, if they still have to continue to roll the debt and debase the currency and drive asset prices up, let's use this opportunity to make as much money as possible, that when we go into the early 2030s and the world is starting to move in ways we don't understand, where the study of economics doesn't even really work anymore, that we'll be secure. Because it's much easier to do it from a place of security, because we don't even know how our businesses will work in that environment. So that level of unknowing is too much for most people to deal with stress. But we've been given the greatest macro risk-taking opportunity of all time, which has been particularly within technology and crypto, because these are tech adoption curves that are playing into the trend of us being replaced by the AI. So we're investing in our own demise. We can make an extraordinary amount of money out of it. Yes, there'll be cycles and it'll come with risks and all of that stuff, but it'll set us up in a place that we can deal with change.
Tron founder Justin Sun predicts that AI agents will take center stage in the next major bull cycle in 2025. These AI agents are autonomous programs designed to manage and trade digital assets, potentially replacing traditional investors and venture capitalists by leveraging market data for decision-making. However, they also come with significant risks, as they remain vulnerable to hacking, reminiscent of the early and fragile days of DeFi. A skilled hacker could exploit a trusted AI agent, leading to massive market disruptions. Sun likens the rise of AI agents to past crypto trends like ICOs in 2017 and NFTs in 2021, suggesting they could be the primary focus of the next bull market. While the potential for growth is immense, Sun emphasizes the importance of caution, warning against the speculative hype that has previously caused problems in the crypto space. AI holds the power to revolutionize the crypto market, but its development must be approached responsibly to unlock its full potential without facing major setbacks. Balancing innovation with security will be key as this transformative technology evolves. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.